What is controlling mortgage interest rates? Well, let's be clear because there's some common misconceptions. Even though we talk a lot about the Federal Reserve does not directly set mortgage interest rates. Instead, mortgage rates are influenced by inflation trends, the Fed's benchmark interest rate, the overall economic confidence, which drives these things called mortgage-backed securities in that bond market. And when inflation levels cool and economic growth slows, rates tend to come down. When inflation rises or the economy gets super hot, rates tend to move up. So the rate dropping question is a matter of several factors. The first is, will inflation remain comparatively low like it is now? We've seen inflation pull back in this last year since the change in administrations, and we're seeing a much lower inflationary rate. Will the current Fed be comfortable easing their monetary policy and start to lower interest rates even more? Will bond sales drive lower mortgage rates? We'll get a new Fed chairman who has a different monetary policy, more in line with the White House's economic plan very shortly. Fact is, in May is when the current Fed's term ends. And so we're going to see some changes in the economic, policy with regards to the Fed and the target interest rates.